Hey all, I'm Byron Hunter with Ember Realty and a licensed realtor in the North Texas area. And today we are here with Melissa Condensa from Guild Mortgage. Happy to have you here.
Thank you for having me. This is great.
Welcome. So we get a lot of the same questions in the real estate and lending world, and we thought we would answer some of those questions for you today. So to start out with question number one, what can buyers do to qualify for the lowest mortgage interest rate?
That is a good question. And there are a few things. So interest rates are for the most part determined by loan program and credit score, and of course the day that you lock. So it's important for buyers, I think, to understand that if they're quoting rates at the beginning of the process, they're quoting rates for that day. And that rate that they get quoted might or might not have discount points attached to it. So it's very important to understand the total picture and also understand what's most important to them. Is it the payment? Is it the cash to close? Is it the down payment? So those are all things that have to go into it. But generally speaking, the better your credit score is, the better. Now that said, 740 is the highest credit score that gets you any benefit for interest rate.
So it doesn't have to be 800?
No. And if you're at 790 hoping for 800, like just stop. Okay. You're in the bragging rights territory. So anything above 740 is just bragging rights. Anything above 760 for mortgage insurance is bragging rights. So 760 is, I guess, technically the perfect mortgage credit score.
Okay, good to know. And what about those mortgage interest rates that people see advertised online? You know, very low interest rates. People want that and qualify for that.
Yes, they do. Usually those are going to be assuming a 740 credit score. Conventional loan, usually with 30% down if you look at the fine print, and then usually with 2.5 to 3 discount points. Wow. So one discount point is 1% of the loan amount. So if you're doing a $400,000 loan, 1 point is $4,000, 2 points is $8,000. Get the idea. So do you want to bring an extra $12,000 to closing to pay 3 points to get that rate, plus the 30% down payment? Then that rate is all yours.
Expensive. Yeah.
But so that's why what you see online is placed online to get you to call. It's basically clickbait.
Got it. Okay, good to know. What is the most common issues that prevent people from qualifying for a mortgage?
So credit. I would say it's definitely credit, unfortunately. So having a credit score below 620 makes it significantly more difficult to get approved. We can do loans down to 540. Now it's going to require a bigger down payment and more closing costs, but it can be done. Credit is the biggest one. Another one, I would say number 2, is probably someone who is self-employed or 1099 and has either not been self-employed for 2 years. And when I say self-employed for 2 years, I actually mean in most cases that you have filed tax returns as a self-employed person for 2 years, or that you have 2 years of bank statements. That can also be an option. But someone who has just gone to like their dream job, but it's 1099, you're gonna be waiting 2 years.
Okay.
So that's probably the second one. And then the third is probably just debt. And people will ask me sometimes, well, how much money do I need to make to buy a certain priced home? Well, it doesn't, like the answer could be different for everybody depending on how much debt you carry. So it's that debt relative to your income that we look at, and student loans can be a challenge. Now, there are ways to work around that with figuring out an income-based repayment, like what's the lowest payment you could possibly make on that student loan. Once we figure that out, a lot of times we can get people to still qualify. But I would say those are the top 3 challenges.
Okay. Yeah, and it's always great. I always recommend individuals to talk to a preferred lender, such as yourself, to have those conversations and have those discussions of what do I need to do to prepare now,
right,
in order to purchase a house, say in a year or 2.
Yes.
Right?
Yeah. No, absolutely. If you're thinking about buying, I mean, contact you, and then you'll get put in touch with me, and we'll have that conversation about what does it take to be prepared, or are you completely prepared now? And could you maybe move your timeline up? Or are there things we need to do? If credit is a challenge, I would say every credit challenge can be fixed. Sometimes it takes time, sometimes it takes money, sometimes it takes a little of both. But we can work through those things, and 2 years should be plenty of time to work through really anything. Even a bankruptcy. Someone just out of bankruptcy, 2 years from now, they'll be able to buy. And same thing with income. Self-employed borrowers, sometimes they filed their tax returns to pay the least taxes. But if they know they want to buy a house in the next year or two, by looking at how they have filed their tax returns, looking at what they want to qualify, I can let them know, hey, you need to claim at least this much in order to buy what you want to buy, or we need to look at a bank statement loan. So all of these things, you can put together a game plan that will help them become homeowners in 6 months, 12 months, 24 months. I would say pretty much everybody. Okay. And sometimes it's like, get a new job.
Sure,
but
yeah, and pursue those other options.
Once they know, then they can actually do something about it.
Great, awesome. Question number 3. How long does someone need to be at their current job to qualify for a mortgage?
Okay, that is a super good question, and one that I think there are a lot of misconceptions about. So we just talked about self-employed borrowers. Self-employed borrowers are going to have to be self-employed for 2 years. Like, there just isn't really a workaround for that one.
Right.
But anybody else, what we're primarily looking for is a 2-year work history. So as long as someone has worked for 2 years, they don't have to be on their current job for 2 years. Now, the exception to that would be if someone gets bonus income or commission income or overtime. If we're trying to use that for qualifying, we need a 2-year history to do an average. But if someone's salary and W-2, they can actually start with projected income. So if they just graduated, like I'm thinking of a client that I'm working with right now. She just graduated from nursing school, so she's got her RN now. She's worked for the last couple of years, but as a CNA, I think, so not making a ton of money. But now she's going to be an RN, and she's got an offer letter, and they're basically buying their dream home. They're going to close the end of this month. She doesn't start her job until October.
Wow.
But because we have a verified offer letter, it's no contingencies, we're able to get that done and actually qualify her with that projected income.
Great.
But she has that 2-year history of working. And even if she hadn't worked the last 2 years, in some cases you can use the fact that she was in college during those 2 years as the work history. So she's doing the work to get the final job.
Yeah.
And so in most cases, there is not a specific time limit unless we're looking at using variable compensation, so overtime, bonus, commission, or self-employed.
Okay, good to know. Excellent, great information. Next question, what is something a home buyer should do 1 to 2 years before ever buying a home? And the reason I wanted to ask this question, it goes into the other question we asked, but I often talk to clients who are interested in purchasing a house. They say, oh, I might be interested in about a year or two. Mm-hmm. A year goes by and they're not even closer to being ready to purchase a house, and it gets delayed and delayed. So what is something people can do now to prepare for purchasing that house in a year or two?
I think the absolute best thing they can do is do an application now. Do a mortgage application now. Find out where they are. Find out they might be 100% ready. There might be things that they need to do, and if they have the proper direction, they can do exactly the things that they need to do to be ready. Let's say credit is an issue. People can work on their credit and just do things that they think are going to help that don't help at all. Like, for example, paying off collections. A lot of times, and this isn't a blanket statement, but a lot of times paying off a collection will make your score worse.
Wow.
And people don't realize that, but they're spending money that could be saved for their down payment to pay something off that's actually dragging their score down. Okay. So I hate to see that happen, obviously. And if they will do an application, that doesn't cost them anything. So we can tell them exactly your income's where it needs to be, your credit's where it needs to be, or we need to do a little bit more work and here's the exact game plan. And we can also go through what a budget looks like. What is your payment going to look like? You want a certain payment, what does that house look like? And also, how much money will you need for closing? So if they need to save, they won't be like guessing and saving an imaginary amount.
Right.
They will be actually saving the right amount.
Yeah.
And they'll be prepared.
So starting that conversation now to prepare yourself for a year or two later, it gives you that roadmap, gives you something to prepare for.
Yes.
And I'm glad that you mentioned fill out an application now. A lot of people are going to say, well, I don't want my credit score to drop. And the credit score is going to drop 2 to 5 points. And we've already talked about that interest rate or how do we get the lowest interest rate? 760 is ideal. So if you're teetering between 775 and 780, filling out an application is not going to drop you down and get a lower interest rate.
It's not. And within 12 months, that 2 to 5 point impact is completely gone.
Right.
So it is a no-brainer. Just do it.
Okay. Get the
Now,
roadmap.
I will say, fill out an application with a lender that's going to be helpful and provide that roadmap for
Right.
you. Because if you just choose an online lender who has posted the lowest rate on planet Earth, they're not going to give you the roadmap.
Sure.
I hate to say it.
Yeah.
So
They're
that would
looking
be
for the
my
quick transaction versus a long-lasting relationship.
your preferred vendor list.
Great. Great. All right. Question number 5. How much do I need for a down payment?
Okay, there's still so many misconceptions about this, so I'm super glad you asked the question. So conventional loans, people think 20%, and they might think I want a conventional loan, so I need to save 20%, and you don't. There are conventional loans with 3% down options. There are conventional loans with 5%, 10, 15, 20, however much you want. And then there are also programs that are designed for first-time home buyers like FHA. Now, the conventional 3% down was really created to compete with that FHA option and provide a conventional comparable, but FHA is 3.5% down. USDA, if someone's buying out in an area that is still classified as rural, it's gonna be some drive time potentially to work unless you work from home, but that's 0% down. So that's a great option. And then for veterans, that's 0% down as well.
Okay.
So 20% is a myth. And if you spend your time saving for 20%, you're going to give up a lot of equity that you could have been building up while you were waiting to do that. So don't let private mortgage insurance and the fact that you will be paying private mortgage insurance if you don't put 20% down, don't let that scare you. Like that's,
Yeah.
I kind of cringe when I hear that. I'm not going to lie.
Now let's also talk a little bit about the investors. For those investors who are looking
Yes.
at getting lending, what about that? What's required for a down payment for an investment property?
So an investment property, technically 15%, but you pay so much in discount points that it basically turns into 20% down. So I would say right now where the market is, that's not really an option. It's kind of a technical option.
Sure.
20% down can be an option for some, but 25% down is going to be really the best, the sweet spot for pricing. And obviously on an investment property, you want it to cash flow. So we want to make sure that we're getting you into a home or getting your tenants into a home that is going to help you make money. And so
Right.
making sure the interest rate is dialed in is very important on those for
Okay.
sure.
Sounds good.
Now, another thing that I think people forget about investment properties or don't think about is that you're qualifying with the rental income that you are going to be
Right.
earning on that. So I think it actually, as long as someone has the down payment and closing costs, getting an investment property or two is actually not as hard as I think people sometimes think it is.
Right.
So
Yeah, and partnering with a real estate agent such as myself who has experience with investment properties. I do property management. I self-manage my own rental properties. I have the applications, I have the contracts to walk you through those little details to make the process not as daunting as it might seem. It is relatively easy to qualify for those investment properties.
yeah,
So great. Well, thank you, Melissa.
Thank you.
For coming here today. Again, this is Melissa Condensa from Guild Mortgage, my preferred mortgage lender. And if y'all have more questions, feel free to give either of us a call and look forward to talking with you soon. Thanks.
thank you.